Man, have you seen this new Microsoft chat bot? Oh my goodness, it's going crazy. It's giving you these creepy answers, and it's like, I swear, I feel like we're in a Terminator movie. I mean, honestly, Elon Musk wasn't wrong when he was saying that we're pushing too far with the AI for too fast. Bro, imagine it told me that I'm a bad trader, that I'm a gambler, that I should stop trading, that I don't have any risk in money management. Man, my mind was blown. I was like, what is this nonsense? This chatbot sucks. Well, he might have been right on that one, to be honest. Hello everyone and welcome back. My name is Dan, and in today's video, as always, I'm going to do a weekly technical and fundamental analysis for both stock market and also cryptocurrencies. We're gonna go over some news that happened and reports last week, and we're gonna go over news and reports that are going to happen this week, and what do I think it will happen this week in the markets. So stay tuned, there's going to be a lot of useful info. And without further ado, let's head to the PC. And as always, we're going to start with Nasdaq 100 technical analysis. As you can see, I've added some more lines, right? Lines are always good in comparison to previous videos. But don't worry, don't be confused. I'm gonna go over and explain why I did that and what do they mean and what do I expect to happen. So, weekly chart Nasdaq 100. See this supply zone over here. This is a very important area that we need to break if we're going to keep the bullish momentum, all right? So as you can see now, 3 times we entered the supply zone and we went down back immediately. So this gives us a very strong resistance area right over here, which we cannot break at the moment. And for me, this is bearish. When I see these big wicks that are not able to push through and not able to break it with strength, because you need strength and momentum, I see this as a bearish sign. Normally, I'm always bullish and I look for bullish signs. However, these are just facts, and price action tells us that on a weekly chart that this looks very bearish. We retested 3 times this supply zone, we couldn't break it. Now we're literally sitting on EMA 50 on a weekly chart, which is our first support area, okay? Which is around 12,300, all right? Depending, of course, on the broker that you use. So if we manage to hold this area over here, then we might have another push to try and retest this area over here. If we break this area, now why I draw these green lines over here and over here. So if we manage to break this area over here, okay, the first target is going to be somewhere around 13,500, okay, on the weekly chart. Of course, it's not going to happen within a week. It's going to happen over some period of time. But if we manage to break it, this area over here, we are going to see 13,500. Okay, now if we break this EMA 50, all right, and if we don't hold as a support, my next target of support is going to be somewhere around 12,000, all right? So I expect the price to go somewhere over here, all right? And this is going to be our first support area. And if we manage to hold around 12,000, that is going to be good. Then we're gonna look from there. We're gonna look at the price action, we're gonna look at all the other signs, what do they say, and we're gonna take it from there. But for now, basically what I wanna see, if we don't hold the EMA 50, okay, on the 12,300, that means that we're gonna break down to around 12,000. If we don't hold 12,000, then obviously the next big support is going to be again 11,500, which is going to be the EMA 200. Probably we're going to get stopped a little bit as well by EMA 20, but it's not going to be a big support there. So to sum it up, so my take on this is that we're going to see 12,000 first before we actually see 13,500. This is just my take on this, and I'm gonna tell you another thing why. What gives me, besides the price action, the confidence to say this. Let me just hide some of these EMAs to make it less confusing for you guys. And I'm going to draw a trend line right over here, right over here, and right over here. Guys, what do we see here? It is a hidden bearish divergence, okay? So on a weekly chart, we have this huge hidden bearish divergence. Look at it. So both MACD and RSI are giving us the signal saying, hey, listen, this isn't really a bullish momentum. This is going to be a bear trap. Okay, so this is another thing that tells me that actually these three wicks that we see here over here on the weekly chart, that they actually do present a bearish price action momentum, and that most probably we're going to see 12,000 first. And if we manage to hold it, good, that's going to be good. If we don't manage to hold it, we're just back 11,500 on a weekly chart, and we'll see from there. However, that's not going to happen right away. So all these things that I'm telling you are just possibilities. So once again, I do expect that we do not hold the EMA 50. I do expect us to break and go and retest the 12,000. And if we do, I'm going to monitor how we are going to react on the 12,000 mark. Are we going to be holding strong, or we are going to break down further all the way to 11,500? Now let me just zoom in further on a daily chart on Nasdaq, just for you day traders out there. As we can see, we created this perfect double top that is very shortable, and currently our support area is 12,000 to around 12,200 right over here. And if we break it, and if we break the EMA 200 on a daily chart, as I've told you guys, we're doomed to go to 12,000. So I would be short biased next week, depending on how we react on news and how we react on these support areas. But try to short it all the way to 12,000 if you see that the price action is breaking. If we break this area over here of 12,200, then the 12,160 is the EMA 200. Short it all the way to 12,000 or so. So I would be bearish for next week, but of course, do not short the support zones until they're broken and until the price action tells you that we're turning into bearish sentiment. Okay, so let's move on to Bitcoin. Okay, I draw some more lines on Bitcoin as well. All right, so this is a weekly chart for Bitcoin, and what do I see here? As I've said in the last video, that we're going to test 25,000, and guys, what happened? Of course, we tested 25,000. So we are currently sitting at this EMA 50 on a weekly chart, and we're struggling to break it. You see, like we're literally struggling to break the EMA 50 on a weekly chart right over here. Again, I tend to be bullish, right? I tend to see good and positive things in the market. However, facts are facts once again. And I do not see us breaking this EMA 50 as of now, unless we have some extremely good news, unless we have some really good, strong macro fundamental news, then we can break it. But I'm going to talk about my price targets for Bitcoin. So what do I think? Again, I see pullback, all right? I see pullback to retest the EMA 200, which is going to be around 23,800. And after we tested the EMA 200 on a weekly chart, if we break it down, my first target is going to be 21,500 or so. So basically, I expect us to pull back somewhere at around 21,600, all right, for the next week. If we don't break, of course, EMA 50, which I doubt. So once we go back to 21,500, if we manage to hold that area right over there, that's going to be a good sign for Bitcoin, and that means that we still can turn bullish and push higher, etc. If we don't hold this area at around 21,000, I expect it to break down all the way again to this demand zone, which is going to be between 19,000 and 16,000, okay? So again, I expect Bitcoin to pull back. First price target 23,800 or the EMA 200 on a weekly chart, and then the second price target is going to be at 21,600 or so, okay? In the unlikely event that we actually keep up the momentum, break this EMA 50 and go higher, then the next logical target, nothing is going to stop us until 31,800. Personally, I think that we are going to see 21,500 before we see the 31,800, okay? This is just my logic. And also, what does support this logic of mine as well? Again, look at this, guys. huge hidden bearish divergence on weekly chart on Bitcoin as well. Okay, MACD and RSI is giving us this huge hidden bearish divergence, which is telling us, okay, we came and pushed too far, we need a pullback. And I believe that this pullback will be definitely to 21,000 or maybe even back to 20,000. All right, once it happened, we just need some bad news in order for us to go lower. However, let's see next week how things are going to be playing out, what's going to happen. Again, if we have some big fundamental news, they always override all the technicals. So as a small recap, again, I expect pullback both on Bitcoin and Nasdaq 100, and I expect Bitcoin to pull back all the way to 21,000 or so, and I expect Nasdaq to pull back at 12,000 first, and then let's see from there. I'm gonna have a look at the other aspects when the time comes. All right, now let's move on and just quickly go over some reports that happened last week and some reports that are going to happen this week. So last week we had, of course, the expected CPI report, which actually edged higher year on year. It showed 6.4%. However, when we look at the bigger time frame, it is a still decline from a previous month, and we're still in decline in the last 6 or 7 months. So inflation is cooling down, but not as fast as we would like to see, and not as fast as, of course, Fed would like to see it, and they are the main guys who should be seeing the inflation cooling down fast. Then we had on Thursday jobless claims that yet again surprised and edged lower, showed as 194,000 jobless claims versus 200,000 expected. So that was another bad sign. PPI was also terrible. Producer price index, meaning the price that producers pay, are also edged higher, and we see the PPI year on year now on 6% versus 5.4 that was expected. So that was really bad. And with that being said, we had some Fed members turning very hawkish or very bearish, and I'm gonna talk about it later. Let's go over the next week reports that are going to be happening. Monday, nothing happening because it's holiday in the US. There's gonna be no volatility. Then on Tuesday as well, nothing is happening. On Wednesday, however, we have FOMC meeting minutes that is going to give us an insight on further Fed opinions and what do they think, what were they discussing on the meeting before making the decision of hiking interest rates by 0.25%. Of course, on Thursday we have jobless claims as always, and then we have some more big stuff, which is going to be GDP, the second report, which is going to tell us is the US economy in recession or not. The previous report was 2.9%, which was actually good, and it was surprised from 2.6, which was estimated. Just pay attention to this report. If it edges lower, that means that the economy is not doing that great and that we might have a recession, okay? And on the Friday, we have Federal Reserve's favorite metric, which is not CPI report, it's PCE report, okay? Core PCE index. Look at this report, pay attention to it. It's going to be extremely important for you guys, and Fed will have a look and make decisions based on this report as well. They actually, as I've said, look at it more than the CPI report. So Friday, expect some volatility for the end of the week. Now, let's move on to our earnings calendar. What do we have next week? Monday, nothing because the market is closed. Then Tuesday, we have Walmart, Home Depot, Medtronic, etc. Wednesday, we have Nvidia that's going to impact Nasdaq 100. It's going to report after hours. Then Rio Tinto, Petroleo Brasileira, etc. Baidu. Thursday, Alibaba, Intuit, American Tower, Moderna, NetEase. And then Friday, Berkshire Hathaway, Canadian Imperial Bank of Commerce, Fomento Económico, etc. etc. So probably, as I've said, you guys are going to find some of these reports important. That's why I mentioned them, and always keep them in mind because they can impact the market. Okay, now let's move on to some news. So what I wanted to talk about is central bank hawks fight back. The Federal Reserve decided to hike interest rates by just 25 basis points earlier this month, and this was perceived as signaling that the end of the tightening cycle was in sight. However, the recent strong economic data, including inflation proving stickier than expected, has provided the hawks within the central bank the ammunition to fight back. Federal Reserve of Cleveland, Loretta Mester, on Thursday, she said that compelling economic case for rolling out another 50 basis point hike. And James Bullard said he wouldn't rule out voting for such move. Basically, these guys gave this hint and the market collapsed on that day. Okay, so they said that the Fed is still considering the 50 basis point hike, and the market is expecting something totally different. The market is expecting 25 or even a pause before continuing further rate hikes. But what these two members of the Fed are saying, like, let's just get over it, hike it by another 50 basis points, which would bring us at 5.25%, okay? And then if needed, hike it one more time by 25% and leave it there, which, to be honest, I don't know, I might even agree with them. I might even agree with them because, I mean, I'm not sure how economy would be hurt if they do that, if they just hike it by another 50 points basis and just leave it for a longer period of time. Probably then we're gonna go into some recession that's not going to be mild as everybody expects, but I'm not sure. Maybe it's a good thing because the inflation is just going slowly down, but it's not really doing the thing that everybody wants it to see, to go sharply down. Okay, so if they hike it by another 50 basis points, yes, that will be bearish for the market, but the market should recover after that faster because they will be very fast on pulling the trigger and pivoting because they know that they cannot hold the rates too high for too long as well, because it will cause a severe recession. So that might be a good option to hike it by another 50 basis point and stop it there. That's it. Then we have a faster pivot than expected, but the economy will hurt in the meantime, and we might see a very big leg down in the meantime on the stock market. Now let's move on to some crypto news. Paxos to stop minting BUSD stable coins for Binance. As you guys, basically, I'm not going to go too deep into this, but as I've spoken in previous videos, SEC is now doing everything they can after the FTX fiasco to clear their name and separate themselves from the involvement with the FTX, Sam Bankman-Fried and everything, which was clear and obvious to everyone. So now they're going after everyone and everything. They're suing everything and everyone for being security and whatnot. They're now doing everything in their power to turn the attention from them being corrupt and bad, and to say, oh look, we're doing something finally, ha ha ha, we are banning all these stable coins and we are prosecuting all these companies and the staking and whatever. It is all BS. It is just pure BS. It is just a fraud. It is just a masquerade to show off that they're doing something now when they know they are the ones who caused this mess and they are the ones guilty of it. Okay, so but basically what does this mean? It means that there will be no more minting of BUSD tokens on Binance, which is the native token of Binance exchange. However, they are not the owner of it. It is a company called Paxos, and they are the ones making it for them. So this only means that there will be no longer BUSD circulation of the coins, and over time probably people will stop using BUSD overall, and they will shift to other stable coins or other coins in general. Like before stable coins even existed, people just traded Bitcoin pairs and then Ethereum pairs, etc. So let's see what's going to happen with this one. CZ, the CEO of Binance, he said crypto industry will probably move to non-dollar stable coins, which makes sense. So he says that industry may start to use stable coins pegged to the euro, yen or Singapore dollar following recent actions against the US dollar peg. Makes sense because all these other currencies are very more acceptable and very more open-minded about stable coins, okay, and they're not that harsh as the US is. So we might see some euro or yen or Singaporean dollar or something like that, all these countries that are very open to crypto. We're gonna see how the things will evolve, and we're gonna see what's going to happen, and you will have alternatives always. If not, people will just go back to trading Bitcoin pairs, etc. It's not the end of the world if we lose stable coins, but stable coins are good because they provide you this bridge between the traditional finance banking systems and the crypto, and make it way easier to withdraw your money, to send your money, to receive, etc. However, we're going to see what's going to happen with all this stuff. As I've said, next week I'm bearish on crypto, I'm bearish on stock market, I'm bearish on everything. I hope I'm wrong, because as I've told you, I'm a bull usually, but I'm not really confident that things are looking that great. But let's see, take it step by step, one by one, and we'll see what's gonna happen in the next week. Alright guys, that will be all for today. I hope you liked the video, and if yes, please subscribe, like, and share. I'll be trying to record these weekly analysis regularly, unless I'm on vacation or something. But yes, I will try to keep you updated and give you a hint or edge that you can use to make some money in the markets. And if you do so, I'll be super happy. And if you learn something new, I'll be super happy again. Thank you so much and have a great day.